Hello, crypto folks. And yes, JP Morgan, the most esteemed and biggest bank in the world, run by that swell guy, Jamie Dimon, has actually been accused of knowingly assisting a Ponzi scheme. Shock, I know, right? Why would they do that? Probably because of profits. So, this Ponzi scheme was $119 million. A pretty big Ponzi scheme. I mean, peanuts for JP Morgan, but a lot for the most of us. So, banking giant JP Morgan is accused of knowingly enabling an alleged Ponzi scheme targeting retail investors. JP Morgan is known for manipulating silver and other commodities to the detriment of investors. Plaintiff David Stapleton alleges the bank boosted an obvious fraudulent scheme orchestrated by Sanjeev Akara. Now, usually these banks are just saying, like, we're too big, we can't research everything, therefore we didn't really know we were doing this. The CEO of Silicon Sage Builders, which resulted in significant financial losses for investors. Duh, Ponzi scheme, like that always. He says that Archaea raised more than $119 million from 250 investors for real estate projects that were largely unprofitable or non-existent, allegedly using Ponzi-like tactics to pay early investors with funds from new investors. These things are really kind of hard to track because the money is coming from somewhere and people are seeing returns, so they tend to invest more into it. And they said Chase Bank hosted all the accounts and executed the deceptive transactions that allowed them to run the fraudulent scheme and dissipate the receivership entities. Now, that doesn't have too much evidence in itself that says Chase willingly helped them, but it does not look good for Chase Bank when something like that happens. The receivership entities held a combined 77 bank accounts at Chase Bank and conducted more than 130,000 banking transactions through Chase Bank. Chase Bank knew and substantially assisted Archaea's scheme. Now, they knew they had big clients with Archaea. I don't know if they knew that they were running a Ponzi scheme, but these guys at Chase Bank, they should have enough experience to know a Ponzi scheme when they see one. So it is very, very suspicious, in my opinion, and many other people's opinion. Stapleton claims a Chase business relationship manager was aware of the fraudulent scheme, and we don't really know which manager it is, actively assisting in managing the accounts and bypassing internal safeguards such as fraud prevention protocols. Now, I don't think this will go way up to the CEO. Like, if they identify who this business relationship manager is, then he's going to be in big trouble, obviously. The lawsuit requests compensation for damages caused by a fraudulent scheme and the bank's alleged role in enabling it, seeking punitive damages, attorney fees, and other remedies. Now, I don't think it'll affect the entire company, but I do think the relationship manager is kind of screwed if they figure out which one it is. Chase will probably have to pay damages, and they will suffer some kind of civil penalty because they didn't do their due diligence in checking out that this was a scheme. They're probably going to have to pay attorney fees, but this is probably going to end up in a settlement somewhere because since Chase did actually host all these accounts, there's very little way they can get away with it. And a combined 77 bank accounts at Chase Bank and over 130,000 banking transactions for this Ponzi scheme, that's a lot. So Chase is kind of like up a creek without a paddle at this point because there's no way they can actually wiggle their way free from this. This is a very serious matter. The DOJ is going to get involved in this most likely if they don't actually settle. And like I said, I don't think it's going to trickle all the way up to the CEO and maybe the senior managers, but there's going to be significant penalties on Chase Bank, and they might be under a more strict watch for a while because they engaged in this kind of fraud. Now, I don't really know if they can prove that it was knowingly. I mean, maybe like the relationship manager, they would have to submit a lot of information, but it is something to watch. So yes, JP Morgan Chase, Ponzi scheme, $119 million, quite a lot of money, and this definitely hurts their reputation. Not that their reputation was really all that good to begin with a lot of people, especially in the crypto industry. Kraken actually wants a jury trial for its battle with the SEC over securities law violations. And I think they have more confidence in that than a bench trial. Now, All these other trials have actually ended in summary judgments from the bench. But now they want a full jury trial because I think like in a jury pool of 12 jurors, I don't think it would be like a unanimous vote that Kraken or any of these exchanges are guilty. So they're requesting a full jury trial. So they're probably going to get one. Now, a full jury trial is going to take significantly more time than it's going to take a significantly more time than say like a summary judgment, and that's because a summary judgment, the judge essentially just makes the call, jury trial, discovery, all that other stuff, and then like jury deliberation. It takes a significant larger amount of time usually. So they were charged with operating its crypto trading platform as an unregistered security exchange, broker, dealer, and clearing agency. Earlier this year, Kraken filed in U.S. District Court to dismiss those charges, positing that the SEC's claims would widen the definition of investment contracts and expand the regulator's jurisdiction outside its delegated responsibility. Now, that is actually a really good plan of attack because in recent rulings against the SEC, and yes, all of them have been almost against the SEC, that is generally what the judge rules. And that's what the SEC is getting its ass kicked on because they're just overreaching their authority. That request didn't fly with U.S. District Judge William H. Orrick, who denied the exchange's request last month, ruling that the SEC plausibly alleged that at least some of the cryptocurrency transactions that Kraken facilitates on its network constitute investment contracts. But other judges have actually ruled differently, but they're just saying some. And I do think it has to have a way with like how the exchange promotes the coin, if any, because the SEC kind of took back their claim that coins themselves were securities, and they even apologize as much as the SEC does for the confusion it caused. So I think they have a very, very hard case in front of them. In a new document filed in court on Thursday, Kraken requests a jury trial and responds to the SEC's complaint, argued that it operated for more than a decade without any hint from the regulator it was violating securities laws. And I think that's going to hurt the SEC, especially with the decisions against Binance coming down that are in favor of Binance and not in favor of the SEC, and of course, other cases. I think like in the end, the SEC almost has to appeal the Ripple case if they want to fight any more of these cases. That deadline is going to dry up by October 7th. So if they don't actually do it by the 7th, they probably won't be able to win any of these cases. And their delay tactics and stall tactics will just go to naught. In fact, in 2021, the chair of the SEC, Gary Gensler, told Congress that the exchanges trading in these crypto assets do not have a regulatory framework at the SEC. So they really don't have a framework to actually impose their penalties or impose their rules and laws. It is only Congress that could really address the lack of framework. Kraken has tried to work with the SEC to make registration feasible, but the industry's efforts have been stonewalled at every step, as the SEC has instead chosen to pursue a strategy of fighting with its sister regulators, notably the CFTC, for enforcement authority. Its chair admitted it did not have. So Gensler said like they don't really have a framework. There's still a lot of argument between the SEC and the CFTC as to who actually holds the power. And this has predictably led to a patchwork of inconsistent and irreconcilable court decisions in an area that is plainly in need of uniform regulatory approach. Now, I don't really know if this judge is less friendly towards Kraken, but it would be weird if he ruled against Kraken when everyone else ruled against the SEC. And I think in a jury trial, a judge that's more favorable towards the SEC would have less effect. And I think Kraken is very, very confident that they would actually win in a jury trial. And I don't think the SEC actually wants this because it could just make them look even worse. Coinbase has actually organized an NFT legal defense fund. The SEC, after being unsuccessful in going after crypto projects, have turned their attention. Yes, folks, they have turned their attention to NFTs. So now there is a legal defense fund for NFTs. Coinbase has emerged as a vocal advocate for crypto industry in the face of ongoing regulatory crackdowns in the United States. Stand with Crypto, a political advocacy group led by Coinbase, launched a legal defense fund for NFT projects, according to a September 13th post on the X platform. Dubbed the Creator Legal Defense Fund, the $6 million fund is backed by venture capital firm A16Z and NFT marketplace OpenSea. According to Stand with Crypto's website, it is also backed by law firms including Finwick and West LLP, Goodwin Procter LLP, and Latham Watkins LLP. With the SEC issuing OpenSea's Wells notice, as well as other attacks on artists and creators, it has become clear that those looking to build on blockchain technology will continue to face significant legal threats and challenges. Now, I do think this is one of the hardest cases for the SEC to win, because then you get into the realm of, well, you're considering these NFT securities are basketball cards and baseball cards, in your opinion, securities as well. And I don't really think the SEC has any real good way to answer that. Because a lot of these are just digital collectibles. They're just digital counterparts to their physical collectibles. And the SEC, if they can't say coins are securities themselves, they definitely can't say NFTs are securities themselves. And if that, they've actually rounded down their lawsuit on the way that platforms actually promote these collectibles. If they promote them as an investment with a promise for profit, then they might be in the doghouse. But otherwise, they should actually be okay. And Coinbase is raising money to defend these people. I think part of the incentive is to completely crush the SEC at whatever they're doing. If they're thoroughly crushed, then the SEC will find it hard to stand up again. They're basically shutting down each avenue of attack the SEC has against the digital economy. And right now, the SEC is not faring too well. The crypto industry has been the target of numerous enforcement actions by the United States regulators. In August, the SEC Commission served as a Wells notice, a precursor to a lawsuit from the agency, to OpenSea, alleging the NFT marketplace sold unregistered securities. NFTs are tokenized proofs of ownership for a specific item, such as digital art, music, yada yada. The SEC also bought actions against cryptocurrency exchanges Coinbase, Binance, and Kraken. But like I said, against the specific projects, they failed. Against Coinbase, Binance, and Kraken, they are failing. So they're targeting NFTs right now. They're basically casting a wide net and seeing what sticks. And the answer is not a lot right now. Of course, Coinbase is one of probably the biggest supporter in terms of monetary funds to legal defense of crypto companies. This thing right now is called Stand with Crypto, and it ranks the Political Action Committee does rank candidates in U.S. federal elections from A to F based on their support of pro-crypto policies. But the thing is, they're donating a lot of money to different causes, and this NFT thing is one of the causes for the Coinbase advocacy group. So, new thing defending NFTs. Although I'm not crazy about NFTs, I do support this action because we do need the SEC to be defeated at pretty much every single junction, and this goes a long way to do that. Also, and lastly, Kraken, which is the popular clicker game on Telegram, is going to launch on Binance Launch Pool. Now, Kraken has over 30 million players, so it's not a new project. Well, I mean, it's not new. It's been up for a couple of months. More than that, they have over 800,000 paying customers, which is good for any game. And there's going to be rewards. A total of 90 million Caddy tokens are available as rewards over 4 days for participants. Caddy will be listed on Binance for trading on September 20th. So because of that, Caddy will actually be worth a lot more. So you might actually want to get in on this. Binance Launch Pool announced that it will support Telegram-based game Kraken as the 59th project to be added to Caddy. The news has created curiosity in the market, especially given the popularity of Telegram-based gaming bought with a kitty theme. Additionally, it's spurred conversations about how the news would affect the cryptocurrency's price once it begins trading. Like when Binance initially lists something, it generally does go up, but then the Binance effect kind of fades and it drops back down. Kind of like how the Coinbase effect was, but I think Binance has largely taken over the Coinbase effect. Binance announced the inclusion of Kraken to its launch pool, allowing users to acquire Caddy tokens through airdrops by locking BNB and FDUSD. Reportedly, the 4-day farming phase for cryptocurrency will begin on the 16th of September 2024. Kraken's buzz is interconnected with Caddy token going public on the 20th of September 2024. It is also notable that Binance will support trading pairings with USDT, BNB, FDUSD, and TRI. The action demonstrates Binance's continued commitment to supporting advanced Telegram-based gaming initiatives. Obviously, Binance wants to be a part of this. They know how big Telegram is. They know how big the platform that Telegram pushes is, and they know that these are so-called clicker games can be way more successful than other GameFi. Of course, previously Binance showed its dedication by supporting newly developing game-based tokens by adding Hamster Combat. as the 58th project on launch pool, and now Cadison's is going to be the 59th. So yes, I do actually anticipate a price rise for Cadison, and hopefully you guys can get in on some of it and also the airdrop. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.